What's up, everyone? In this video, we're going to be covering one of my favorite stocks, which is DraftKings, and it's up 7.5% today. So we have some good news to cover with this one. We're going to be going over the news with DraftKings, my thoughts on it, and some other important things to know. So let's get right into it. Like I said, DraftKings is up 7.5%. It looks amazing right now. Some news came out showing the new renderings for DraftKings Sportsbook at TPC Scottsdale. For those of you who don't know, TPC Scottsdale is basically a giant golf course. It's really nice. Basically, we can see some of the renderings that came out. This is supposed to be the outside of the DraftKings Sportsbook. If we continue to scroll down, we can see some renderings of the inside. And if we scroll down even more, we can get what looks to be the backside of the building. What's really cool is that at this building, you'll be able to, of course, place your wagers. There will also be a restaurant and other entertainment. So that's awesome. The renderings look great in my opinion, and I was very pleased to see it. Another thing is that this whole facility is expected to open in the fall of 2023. So keep that in mind. It looks really cool in my opinion, and I'm very excited for the opening. On another note, looking at DraftKings stock more specifically, obviously it's doing amazing today, but over the past year, it's been bad. And it's not just DraftKings that's been doing bad in terms of stock price performance, but it's also many other stocks, especially in the growth industry. So whether you're looking at DraftKings or Zoom or Affirm or SoFi or any other growth stock, it's down significantly. But it's not even just the growth stocks. Even if we look at some powerhouse companies like Facebook, they went from $380 all the way down to $190. Amazon went from $3,700 all the way down to lows of like $2,700. Let's take a look at Netflix. Netflix went from $700 all the way down to $338. So it's like certain stocks are really struggling right now, and DraftKings is one of them for sure. So while it does really suck in the short term, really it's just giving me and everyone else an opportunity to get shares in long positions for the long term if you like the company. So it does really hurt to see DraftKings falling so much in the short term, but at the end of the day, if it weren't for these types of events, there really wouldn't be a ton of great opportunities out there. So, you know, there's definitely opportunity when chaos happens. So that's interesting there. But all in all, the stock's doing pretty dang good today. What is important to know with DraftKings is that they have earnings coming up. Earnings are set to release on May 6th, and we can see that their revenue estimate for this upcoming quarter is $415 million. DraftKings revenue has been growing at just an insane rate, and I love to see it. So check this out. We'll start from the beginning. 2018, their annual revenue, $191 million. 2018, annual revenue, $226 million. 2019, $323 million. 2020, $614 million. 2021, $1.3 billion. From 2017 to 2021, their annual revenue went from $191 million to $1.29 billion. They're growing at a very respectable pace, and it doesn't look like it's going to slow down anytime soon, considering the aggressive marketing that they're doing, but also all the other states that are left to legalize sports betting. So I don't think this revenue growth is going to slow down anytime soon, which I love to see. Now let's check out their revenue growth on a quarterly basis. Looking at DraftKings revenue, we can see that their revenue is cyclical like many other stocks out there, and I want to give a good example with Apple. Check this out. So Apple, we can see that their Q4 revenue is almost always their best quarter of the year. We can see Q4 2019 appears to be the best quarter. Q4 2020 appears to be the best quarter. Q4 2021, best quarter. So like we can see like how every single time they report their fourth quarter revenue, it's almost always higher than the other quarters because they have different sales going on at that time and product releases and all of that stuff. DraftKings is no different. Their revenue is cyclical in the sense that their Q4 revenue is almost always the best, considering the sports events that we have going on in that period. So giant sports events like the Super Bowl, college football, and all of that stuff is more popular than other sporting events. So I just want to say that DraftKings Q4 revenue will most likely be the highest annual or the highest quarterly revenue for 2021, just because it's cyclical, like basically almost all of their stocks out there. So keep that in mind. With that being said, the revenue for this upcoming quarter is expected to be $415 million. In their first quarter of 2021, it was only $312 million. So I would love to see this revenue come in as high as possible, but I'm not expecting it to be greater than $473 million. If it does, that would be jaw-dropping, but we'll see what happens. I'm definitely expecting it to be lower than $473 million, obviously, but it'll probably come in around that estimate. If it comes in greater, awesome. If it comes in lower, then it is what it is, but we'll see what happens. Either way, the revenue is growing at an awesome pace. Looking at the calculator for DraftKings, let's say we wanted an annualized return of 10% every single year, and let's say we assumed a revenue growth rate in the bear case for 18%. 18% revenue growth rate, and let's say a price to sales ratio of 3. That means you can pay $13.68 for DraftKings stock to get a 10% return every single year. Again, this is the bear case. I think it will be very, very conservative numbers for multiple reasons. The first one being that the revenue growth rate at 18%, while that is very high for other normal companies out there, DraftKings is a growth stock, and with growth stocks comes a lot of expected revenue growth. We could see from over the past 3 years or the past 4 years alone, their revenue went from $191 million up to $1.29 billion. And keep in mind, DraftKings is still doing a ton of marketing, and they have a lot more states left to legalize sports betting. So I really do not think this revenue growth will slow down anytime soon, but we'll see what happens. So even if we did the 18% revenue growth rate every single year for 5 years, that would take the year 5 revenue to basically $3 billion, which while it is a lot and while that is significant growth, I don't think it's unreasonable given how quickly DraftKings is growing and just looking at their past revenue and how they grew in the past. So either way, I think 18% is reasonable, and I wouldn't be surprised if it was higher than 18%. I'm definitely expecting higher than 18%. So, but let's say in the bear case it was 18%, and you had a price to sales ratio of 3. Right now their price to sales ratio is 5.3, but I definitely think that I definitely think a price to sales ratio of 3 is more than conservative. That's just my opinion. I can definitely see it a lot higher. Honestly, I could see it closer to 5. Even Apple's out here trading at a price to sales ratio of 7.25. But then again, Apple is a completely different comparison, and honestly, it's probably not a fair comparison. So either way, though, I think that in the bear case, these numbers are extremely possible. I think the base case is more reasonable. 23% revenue growth rate every single year for the next 5 years. Price to sales ratio of 4. That means you can pay $22.44 or lower for DraftKings, and you'll get a 10% return every single year if these assumptions are correct. So like I said, if you believe that DraftKings will grow their revenue by at least 23% every single year and trade at a price to sales ratio of 4, you can buy DraftKings for any price below $22.44, and you will get a 10% return every single year if these assumptions are correct. So that's awesome. In the bull case, I have the revenue growth at 35% and a price to sales ratio of 5, which gives a nice margin of safety for you could buy DraftKings at any price below $44.68, and you'll get a 10% return every single year. So all in all, I love DraftKings. It's one of my favorite stocks. I love to see a day like today when the stock is up 7%. Good volumes flowing in. I've been buying this stock for a while. I will continue to buy this stock. I don't plan on selling it anytime soon. It's a great company. I love them. Do your own research. It's just a company I like. I think they're growing at a tremendous pace, and they have a lot of potential for the future. Let me know what you guys think about this one in the comments down below. Besides that, thank you guys so much for watching.